Hi there. You're welcome to another episode of Business Africa with Oluwatosin, a platform where we bring you real people, real businesses, and of course, real experiences. My name is Oluwatosin Komolafe, and I remain your host on Business Africa with Oluwatosin. And today, we'll be unpacking a topic that many people find really confusing. And guess what? The topic is investment. And we are privileged to have a guest that's willing to take us through this journey today. And just a bit about our guest. Our guest is Professor Tijjani Bashir Musa. He is a man whose journey through finance reads like a masterclass in excellence and impact. It is not just a name in academia, he is a force in Nigeria's financial space. A professor of finance in Ahmadu Bello University, Zaria, and a seasoned fund manager who has successfully managed multiple investment portfolios over the years. He has served as a consultant to the Central Bank of Nigeria, a panelist with the Petroleum Technology Development Fund, and is also an associate chartered stockbroker. So let's meet Professor Tijjani. Sir, can you tell us a bit about yourself, your background, and then how you became an investment analyst?
Okay, thank you very much. Well, one thing that makes me, I am Tijjani Bashir Musa by name, as you said. I come from Zaria, born and brought up there, and some of my education it is across the Nigeria because there are some when I attended here in Zaria, Ahmadu Bello University, and even some that have to do with my stockbroking experience. I have to go to Lagos. That is where it obtained. So, you see, I started this idea, the idea of investment. I have a passion about it. And when I was in the secondary school, I happened to be, good in economics. And of course, because of that, I wanted to find any field that related to economics. So, unfortunately, after my secondary school life, I have to go to, because lack of orientation, let me put it that way, I have to find myself in College of Education, Kapanchan, where I have to study maths, geography. So because of that, I'm not having that decision to continue in that line. So I have to undertake what they call then advanced level GCE, where I have to take economics, mathematics, and geography. So that enables me to now change to my present discipline. So I started from there, so I find myself in the management and sciences. So based on that decision, I have to select an area, and that area is the finance, which I'm into it up to date. So I'm now, thank God, with the whole decision, with the journey, I'm now a professor in finance. I'm also a member of Chartered Institute of Stockbrokers. I'm a seasoned practicing investment manager, and at the same time, investment analyst. So that is a little about my area.
So what do you think is the most confusing part of investment?
The most confusing part of investment is that volatility, movement, the way the stock market moves, the way prices move in the market, and the way the market moves. You understand? And of course, that is the most confusing. You see something today, maybe 1 naira, and tomorrow it becomes 2 naira. And now you see something 10 naira today, and you find it is different. So that is why knowledge is one of the most important things. And then the ability to take risk. But because that risk tolerance is the most difficult thing in investment. Yes.
Okay, so for someone that is completely new to investment, how can you break it down for the person? What exactly is investment?
This is a very good question. Let's first understand what investment is, because people tend to confuse between investment, gambling, and speculation. These are three things, and they are three different things. You understand? You see, gambling is something, and all these things, it all depends on the two things that define them, or that differentiate the investment, gambling from speculation, speculation from gambling, from investment. Now, it's the risk that involved. You understand? Some people may find themselves doing gambling, but they think that is an investment, and that is not investment. Gambling and investment is different, and speculation also and investment is different. But people are interchanging it. You understand? So the major thing that will make somebody to understand what investment is and what it is all about is the time spent. You understand? That is, what do you mean by the time spent? That is the time that you buy an investment item and the time you sold that investment item. That, of course, defines what we call investment horizon. And this investment horizon is said to be very short when it comes to gambling. It's a bit longer when it comes to speculation. But in case of investment, it must be something above 1 year. You understand? So that is what really, makes investment for somebody to understand if it's into gambling or into speculation or into investment. You should have to measure what is the time, what is the holding period between the three things. So once if a person finds out that the investment that he's going to take is something that will take up to 1 year, then we say that person is into investment. But if it's in others less than 1 year, even though in the investment market there is speculation, but speculation is not an investment. Yes, but at times some think it's an investment because you can speculate. You understand? But definitely.
But are there other investments that are less than a year? Are you trying to say?
Yeah, there are some investment. There are some business activities that are less than 1 year, like gambling. If you take gambling, it's just a matter of turn of the card. When you turn off the card, within a second, everything is over. You understand? But most investment, anything that is less than 1 year, that is not an investment.
So including the money markets, there are some investment that are in money market and some the capital market.
Yeah.
So for those that belong to the money market, I was thinking they are less than a year.
Yeah, they are less than a year.
But are they said to be investment to all?
They are. You see, that is the confusion there. Though I don't want to bring a serious academic this in here, because that one is a this. Some people see, yes, there are some money market instruments, there are some capital market instruments, and the money market instruments are shorter. You understand? And the capital market instrument, they are longer. Yes. They are times more than 1 year. Yes. You understand? Yes. But in the case of the money market instrument, they are less than 1 year. So you see, that is why we have to understand the holding period matters a lot. Anything that is of less than 1 year is not an investment, but it's other business activities. Okay, let's say for instance like treasury bill.
Okay.
We take treasury bill is one of the money market instruments.
Yes.
And treasury bill, maybe you take it for 100 to maybe 27 days, 18 days, 90 days, or 91 days. You understand?
Yeah.
So you now go to treasury bill and then you say you want to buy something and then you put in that of your money. So some people consider it more of investment, but it is more of savings.
Okay.
It's more of savings. Because look at it, okay. We say we invest. We invest by buying treasury bill. You understand?
Mm-hmm.
But then, how long it will take you? Of course, if you come, we are talking of return.
Mm-hmm.
And that return, the way they issue, treasury bill, it's just that they will now issue it at discount. They will say, okay, come please, we need money. Government need money, maybe to finance public debt or to finance all of our public activities. You understand? So take this in, and the value of this instrument is maybe 100,000 naira. So we give you a discount. When we give you a discount, you buy it maybe 90,000 naira. So at the end of 3 months, we'll pay you 100,000 naira. You understand? Some people see it as investment, but if you look at it technically, I don't want to bring a lot of literature that has to do with investment here because it's not it's more professional. Like this. But some people see it as investment. But if you look at it, the number of times spent is more or less not a true investment.
Because personally, I've always looked at money markets as a form of investment. Because that's what we've always learned, and that's what we've been taught. That any investment less than a year, it's also that belongs to the money market is a form of investment.
Yeah, it's a form of investment because of the nature of the decision. But it's not a true investment.
Wow.
Because the number of time spent, holding period, the holding horizon, when you buy it and when you sell it.
So
that defines.
So you're saying any investment that is less than a year is not an investment.
It's not a true investment.
It's not a true investment.
It is a speculation or gambling.
Including the money market.
Including the money market. It's a speculation.
Wow.
Gambling. Yes.
Amazing.
Yeah, that is that. But people see it as investment. In a professional setting, when you now take your money into money market,
Yes.
you buy either a treasury bill, either a repurchase agreement, either certificate of deposit, they consider it as investment.
Okay.
But it's less than 1 year.
Amazing.
Yeah, technically in the literature. It's not.
So from your explanation now, we can say investment is anything you invest your money in that is less than a year is not said to be
up to a year.
That is up to a year.
Yeah.
And more than up to a year and more than a year is said to be an investment.
A true investment.
A true investment.
Yeah.
Anything less than that
is either speculation or gambling.
Or gambling.
Yeah, but people are tend to interchange. People are seeing gambling today as investment. Because somebody will put his money now, maybe in lottery or something like that, and then he say investing his money. After the investment, he gets a huge amount of money. But when you look at the rich there and the time horizon, the holding period, that also is not.
So can you shed more light on money market?
You see, money market is a kind of place into financial market where short-term securities, you understand, can be purchased or can be buy or sell. You understand? That is the money market. And of course, you find out that some of them, it depends on the money market instrument. Whether it's a treasury bill, whether it's a commercial paper, whether it's a federal fund, whether it's other form of money market instrument. You understand?
So you say all these are not investments.
We are not saying that all these, if in technical sense, they are not investments. They are not. But then they are other things. You understand?
Yeah.
But then we cannot, these days professionally, they are now interchanging. You understand? But an investment is anything that you hold it for at least 1 year. Yes, that will last for 1 year. Because if you look at the money market, even though it's risk-free, it's almost some of them, they have a little risk. You understand? But it's a way of saving your money.
Okay.
It's just savings.
Okay.
You understand? It's more or less, okay, you have 100,000 naira. Somebody just bring an item that you come for treasury bill. And this treasury bill will just give you, they will give you a discount. So you bought a treasury bill of that worth 100,000 naira, but you bought it at 90,000 naira. So at the end of 180 days, they will give you 100,000 naira. You understand? So if it is invest, that is more of saving. You are just saving your money. But if it is a true investment, you see, you put in, you have to do some certain things. You hold it for a time. You see the behavior of that asset over time. But if you look at it, that thing is fixed. It's fixed. There is no fluctuation. It cannot fluctuate. But in the investment market or in a true investment situation, you will now have to be watching the investment item, how it fluctuates, how it's move, how the situation changes. But more treasury bill cannot change. Commercial paper cannot change in terms of value. Once you enter into agreement, what you are destined to get, that is what you are going to get. It cannot change. But investment changes. But true investment changes. You understand? In terms of value, in terms of whatever. In terms of return. But treasury bill cannot change. Commercial paper cannot change. In terms of value and everything. A federal fund cannot change. Repurchase agreement cannot change. And all the money market instrument doesn't change.
It does not change.
Once you enter into the agreement, you enter it. And the interest rate that you are going to get on it is fixed. You understand? But investment is not fixed. Yes.
Wow, amazing. I'm learning something.
Yes.
So could you break down the main types of investment for us?
The main type of investment?
Yes, let's say like stocks, bonds, mutual funds.
Okay, we have so many investments. You can have exchange traded fund. You can have, investment in mutual fund. You can have investment. In fact, even in the commodity market these days, like gold, silver. Like now, they are even coming up with commodity market instruments, like, having a warehouse receipt and payment are received. You understand? But we have so many investments. You can either invest in exchange traded fund, mutual fund. You understand? and maybe other types of securities. We have so many of them.
So what should a beginner consider when he or she wants to start investing?
Yes, that is a very good. For a beginner to consider investment, then the first thing he has to measure the level of his risk tolerance. Risk tolerance is what differentiates one investor from another. And it also what differentiates one investment from another. That is, for example, now an investment item that is good for somebody with a certain level of risk tolerance, it may not be a good investment for another person. And that is why you find out that even in the investment, we have 3 categories of people based on their risk tolerance. There are some we categorize as those people that have unlimited want of risk. You understand? So of course, those they don't have, we often call them risk lovers. And they have, a category of people, or set of investors, rather, that you see, they always look at times, if they look at the investment item, then they look at also the risk level of the investment. They will bear the risk, and they also purchase that investment item at a certain level of risk. But there are some, they have unlimited want of risk, that they don't want risk at all. That is what we call, or we categorize them as risk averse individual. They don't, anything that has to do with risk, they want to avoid it. So that is why you cannot see future when you come to investment. It's all about the risk tolerance, individual risk tolerance, that will make him to go for a certain investment.
Okay. So how can a beginner manage the risk now?
The beginner,
yes, I just want to start investing. How can I manage risk?
First, you have to define your risk tolerance. At what level are you? You know yourself.
Okay, so I'll be the one to define.
Yeah, you first define yourself. How do you yourself, you know yourself. Some people, when they see things, you ask him to put his money somewhere. He say, no, he cannot put. There are some money for some people today that they cannot put their money into the stock, buy stock, or they prefer buying land. You understand? But if a true investor may not even want to go and buy land, because to liquidate land is a difficult thing. But so what I'm trying to say here is that you see some people, they are all moved by this risk tolerance. You understand? Some certain people, they know themselves. When you ask them, when you now find an investment specialist or professional, the kind of questions coming from, you ask him and the way he responds, or the way he responded to questions, you now be able to understand the kind of, level of risk tolerance that investor is.
Okay.
Yes.
Wow.
Yes. So
awesome.
From there, you now be able to know this is what the kind of, security you can put in your money. Yes.
Okay. So when analyzing a company or a stock, what are the major things to look out for?
The major things you have to talk, there are 2 arguments regarding that.
Okay.
The people say that if you want to analyze a company, the first thing, you now go to their balance sheet. You go to the financial statement.
Okay.
In the financial statement, you now look at those, what we call fundamentals. These fundamentals, it has to do with the company earning. You have to go through all the balance sheet. You look at the asset level, you look at the income statement, you look at the cash flow statement, and you look at the statement of their retained earning. So you now look at the earning of the company. You look at those fundamentals that have to do with the company. You understand? And then look also about some economic conditions around that company that may likely affect the company, either in the short run or in the long run, or maybe in the medium term. So when you are now looking at that, we now say that you are looking at the fundamentals of the company. But this is the argument of some scholars or some people or professionals agreed in that way. That if the best way to analyze a company and even the movement of the stock of a company is to go by that fundamental analysis. You analyze them based on the internal thing, something that has to do with the company, and maybe economic, macroeconomic variables that may tend to associate or have, a kind of impact or influence on those fundamentals. But then there is also another argument that they don't see it that way. When you come to invest in a company, they don't have to waste their time trying to, analyze the fundamentals of the company, but rather you just look at the behavior of the asset that belongs to that company.
Right.
How does it behave? You understand? When you now know that that is the movement, the trend is that for the first year you see the company this is going slowly, but then it will improve. It will reach in the fifth year. It will tend to be at somewhere at the peak. Then after that time, then the security will also come down. Then after some time, it will also peak. You understand? So these people, these categories of people or investors, they just look at the trend, the behavior of the asset, and the volume they used to purchase in terms of when they come to trade on that volume. Because the sentiment that when they come, you find out that people are rushing for one particular security or asset of the company. So they just look at that. They don't want to know whether the company make profit, or they don't want to know whether the earning is good, or they don't want to know whether the asset is that good or not. You understand? Or what they just want to see the behavior of the asset over time. Now, when they discern that pattern, or they understand that pattern of the movement, then they will now be able to predict what will happen in future regarding that company. So that is just that. So that is why there are two arguments. Some they use fundamentally, some they use techniques. But the best way of doing it is to combine the two. Yeah, to have the mixture of the two. So that by the time when you now understand how the company asset behave, and you also have the idea about the earning of the company, the asset of the company, and those economic variables that tend to affect the company performance in one way or the other, then you should be able to now know how the whole market will be regarding that particular.
So where do you stand? Are you part of the fundamentalists or those people that focus on the technical aspects of?
Yes,
or you merge both?
I myself, I used to mix it, honestly speaking, yes. Because the problem is that we may tend to see some companies, they are very good in terms of fundamentals. But then, when it comes to increase in the share prices, they are so slow. And when they come to give dividend, after you find out that the dividend, the asset is there, the earning is there, but then when it comes to give dividend, they don't give dividend. The kind of dividend they give is not that good. You understand? So the best way to go about it is to combine the two. That honestly speaking, you need to know the position of the company first. Is it solid? If it is solid, then you can now also try to view the behavior of the company. Is it something that at what level, at what point that this company asset used to rise, the price rise? Because what we are after in the investment market is to now look at which stock or which asset is said to be undervalued. Of course, we go and purchase undervalued asset, so that when the price of that undervalued asset is corrected, you now sell it, you make your gain. Or that's for speculation. Then, but if the asset is overvalued, then you also, sell all overvalued assets, because definitely you are not going to make anything in future. So I try to combine the two together, but I do my fundamental analysis, and then I also look at the stock. And at times I only base my argument, my analysis on the fundamental of the company. Okay. Well, at times I only base my argument on the technical. But if it is a long-term investment that you want to make, then it's better for you to combine the two, to mix the two argument, both the fundamentals and then that of the techniques.
So where can we get this information from? So if you want to analyze the company, do you have any platform where you get these fundamentals?
Yes, that is why I was talking about knowledge. And the problem with this investment, you just need to have an expert. But if you want to start it, then you have to be starting, you have the ability, you have to understand how the financial statements have been analyzed. It's from there you now be able to know whether the earning of the company, the based on the financial statement, you now come to know whether the company make profit. You also come to know whether the earning of the company is improved over time. It's also from there you now know the asset of the company is good or bad, and how the asset also moves. Is it increasing or is it decreasing? All these things is from the financial statement.
And
So if you want to,
they are available online.
they are very, in fact, it's mandatory for each and every company to publish their, statement, financial statement quarterly. It's available. Whether, and even if a company is not quoted in the market, I believe they must have financial statement for either tax purposes or for other purpose. They must have it.
Okay.
Yes.
So when is an investment said to be a good investment or a bad investment?
Okay, what do you mean by good? What do you mean by
yes?
Good? Is it in terms of earning or what?
Yeah, in terms of earning now.
Earning.
Yes.
Yes, the investment is said to be good when you now especially buy undervalued asset or undervalued security. Then it gets to a certain level. Then you sold it and you make a lot of return. And this return is the price appreciation from the dividend you collected from that. You now combine that defines the return of an investment. So when investment give you a good return, then we said it's a good one. But you also, in another perspective, when you want to see that investment is said to be good, you now look at the risk level of the investment. This thing, you are expecting that the investment risk is maybe at 15%. But then you also find out that you are expecting the return on that investment to be around 30%. So when you compare it, before you now get to the time that you want to invest, after you make all your analysis or after you make your home, you study it, then you find out that the investment at the return on the investment is 30 while the risk is at 15%. So at that level, we say the investment is good. And to define a good investment in a general perspective is to have an asset or security with the lowest risk and the maximum return in the market. Because in the market, we have several of assets and securities. So which of the investment will give you the highest return? And which of the investment there will give you the minimum level of risk? So we say that investment is good and that investment is better than the other. That is just that. That is the general perspective. Yes.
So, sir, how do global events affect investment?
Global events affect investment. Yeah, wars, all these things affect.
So how?
Especially looking at if an election is approaching, and you find out that how volatile the election may likely to be, it can definitely take to affect the level of the market. The investment market will respond to that, because in fact, how even individual, even if there is no crisis in the electioneering period, but then the kind of person that is coming into power matters. You understand? You find out that some people, depending upon the ideology or the kind of the practices of an individual in politics, then. Now, when you find out that somebody is a businessman or he had a business mind coming into power, the kind of government policies that you come up with may be different from somebody that have that less business mind.
So sir, do you think the current economic climate in Nigeria is suitable for investment?
Yeah, it is. It is. The investment market is okay. But then the major problem, because when we are talking of investment, we have to look at the foreign investors.
Okay.
And then we also have to look at the domestic investors. In the emerging market, like Nigeria, you find out that a lot of foreign investors, they are the ones that dominate the market activities. Now, there are some certain factors that make foreigners to bring in their money. You understand? Of course, for example, maybe the security situation of the country can attract people. If you know that when you invest, your investment is safe, you don't have problems. So a lot of people will come. But then if the policies of the government also has problem, okay, like today, can pinpoint out one problem that has to do with the Nigerian economic policy, especially the tax reform. The tax reform now is saying that what they call capital gain tax. This capital gain tax is the kind of tax that paid by foreigners who bring in their money for investment purpose. They purchase an investment item and they sold that investment item. Then they also want to roll it over to buy another investment. But on the process, if they want to roll it over, they have to pay what we call capital gain tax. Now, the tax reform, Nigerian tax reform, it is trying to say that this type of people, they have to pay a lot of money. And that becomes a problem today for Nigeria. Because if you, maybe in the past, they are paying less. You understand? But this thing categorically, the tax reform is saying that they have to pay a certain amount, reasonable amount of money. And that, of course, is discouraging. This is the kind of problem the stock market or the capital market is suffering today because of that capital gain tax. And that is why there is even a lot of outcry. People, they are complaining over and over. They say that capital gain tax will not help, the foreigners to bring in their funds. And if you find out that investment in the capital market today, out of 100% of the total funds circulated, about 60% is owned by the foreigners. So by the time when you now remove that 60% from the market, then the market is going down. There will be no activities. So that is a problem now. That's
what do you foresee now? Maybe in the future.
In future, of course, if they maintain and they are discouraging these people by way of taxing them more and more, you understand that the people will now try to, take away their phone. And of course, the phone will have to be moving to another country. It will not be here in Nigeria. So that is one of the major problems now today. And that's what is affecting the market activity. And that is why when you now go, you find out that the market capitalization is going down because of the problem of capital gain tax. Yes. So that becomes a problem. And that is why and Nigeria, of course, the problem, because the economy of Nigeria, the problem with the economy. And then we borrow a lot, we're into debt traps, and this debt trap makes the government to just source money from, all available opportunity. And one of the opportunities is how are we going to, because there is a lot of money coming into Nigeria through investment. Then they also have to pay. They also have to contribute to the Nigerian economy for it to grow. You understand? So that is why the government feel, yes, they have to pay some certain amount of money by way of capital gain tax.
Okay, so sir, as a professor of finance now and a fund manager, if you had to sit with the president of Nigeria, now what would be your counsel to him as regards this whole tax reforms?
As regard to
tax reforms.
Yes.
But what did you just explain?
As regard to tax reform, in one area, especially something related to investment, of course, they have to pay a certain amount of money because they don't have money. In fact, all the outlets of revenues in the country, it has one problem or the other. Or some outlets, it has even been leased out to some either foreigners or even people within the business. So I think I will have to look at it in what way that they will also help the economy to grow, and how also still maintain or retain that confidence for the foreigners to continue coming to bring their money. Because the emerging market, Nigeria, the emerging market, that the return on investment in Nigeria is said to be more than other countries, neighboring countries. So based on that, I will try to find what is the moderate, to have a balance anyway between the foreigners and that what also obtained in our economy, so that they can continue to come and then the economy can grow in that.
Oh.
Yes.
And I hope we get meeting. All right, sir. So, sir, for a beginner now, right, what is one investment tool you recommend, for
someone?
Yes.
Mutual fund.
Okay.
Investment in mutual fund.
For a beginner now?
Yeah, for the beginner.
Can invest
you can buy because mutual fund will now make, even the return on mutual fund is greater than any other one. Even though, there is risk there. But when a beginner, I want to, have a stock of capital, want to, get capital, where you start is buying mutual fund. Because if you go to the market of mutual fund, you can get a stock of 10 naira. When you have 1,000 naira, you can still buy stock for 1,000 naira. I can continue to accumulate. By the time when you accumulate, you want to have what we call capital formation. You can have capital formation through that. You every day, maybe every month, at the end of the month, you are able to buy a stock of 30,000 naira. Then by the time when it's up to 1 year, you imagine the number of this thing. So when you want to raise that this thing, by the end of the year, when you add all these things, you have it involved in a big amount of money. So the best way for a beginner to start investment is to invest in the mutual fund, especially stock.
And what's the least amount of money?
The least, there is no least. There is no least amount.
You can start with 1,000
You
naira.
can start with 1,000 naira. There are some stock that is being sold at the level of 1 naira, 2 naira, 3 naira. Even 0.5, I saw also saving, this thing, also savings. It's sold at yesterday 50 kobo. So with 10,000 naira, you will be able to opportunity to have 20,000 units of that, and which I believe if it is a prospective, it has a high prospect. When you buy it, one day it will turn to become 1 naira. So yes. So there is no limited amount of money. But the only problem when you started investing, you'll be triggered to have more money in your hand so that you put it into the market. That is the problem. But there is no limitation that you must have. There is no exclusive preserve that you must have a certain amount of money for you to invest. Yes.
Okay, so what are the mistakes you think beginners make when they are investing, and how can they avoid it? As a beginner now?
As a beginner, when you go for passive investment. What to call active investment and passive investment. What I mean by passive investment, you just go up head, you just do something without scanning the market, having an insight about the market, or having a general knowledge about the market. You understand? You just put your money there. That is the problem. Investment doesn't take that that perspective. You have to be an active investor. What does that mean? That you need to have a little knowledge about what is happening in the market currently for you now to invest. You understand? So all beginners, the first mistake beginners make is to just go for a passive investment activity. Once if you go, you do not know, having any idea about what is happening in the market, and you just put your money, you have problem. You understand? Even though at times it works, it may work. You understand? But not all the time it works. You understand? Yeah. So you have to be an active investor, and the only way to be an active investor is to now understand, have a clear knowledge about what is happening in the investment market. And if you don't have that knowledge, because knowledge itself is of a different level, so you now meet somebody that has the knowledge, professional, that will advise you. You understand? To go for a certain investment. Yes, that is the best.
As a beginner now, the first thing I need to invest in is knowledge to become an active investor.
Yeah, to become an active investor.
And then if at all I want to invest, you said earlier I should invest in mutual funds.
Mutual fund, yes.
That's like one of the safest investment.
Yeah.
Okay, so how do you think technology has changed the way we are investing currently?
The technology, it has a lot of impact. You see, in the past, if you come to invest, you have to find a designated place. That is, all things have been centralized. You understand? That we can in Nigeria then, we have only 2 places that you can trade. You either go to Lagos Stock Exchange or you go to Abuja Stock Exchange. But over time, you find out that people have to gather in one place. You understand? For bidding and for offer. You understand? They find themselves in one place, in the designated place for them to trade in the market. But now, technology, it has changed the pattern. Now, market, it has been decentralized. All the time in my office, if I don't have to go to the stock exchange for me to trade. I will trade where I am. Now, I can trade using my phone. You understand? This is the technology. Because of, that is why I think, market, it has been decentralized now. Everybody has a different platform. You can, at times you can place order in the night, at times you can, a lot of things like that. It's the act of the technology. You understand?
Okay. So what do you think about these digital investment platforms?
Yeah, digital investment platform, It's something that one has to. That is why I always say knowledge is the most important thing. Digital investment platforms, some of them, they are scam. They are scam. Because look at it, a lot of these digital form of investment, they use what we call index. You understand? When you are now doing index, you are using index, you may not have clear knowledge or understanding about the asset because you don't know about the pattern or you don't know about the fundamentals of the asset. Is the asset strong? Is it good? So they just rely on what we call technical analysis, that's the behavior. That because the trend of the market is like this, then over time is this. But some certain assets, they are not even good. Their company, they may not even exist. You understand? But some people just open a website and then be floating, that kind of thing. So, but there are some that are good anyway. There are some that are good if all things are based on reality. Therefore, somebody to go for all the digital platform, you need to understand the kind of how the operation of those platforms for you to start. Otherwise, you may even be in the hand of scammers. You understand? There's a lot of scammers are there. But then
there are other credible ones in Nigeria.
There are other credible ones, yes.
Okay.
Good ones. You don't have problem with them. You put in your money, you withdraw at your own time. You understand?
Okay. Yes. Maybe after this podcast, I'll ask you for some of those platforms for those that may be interested in investing with them. So, sir, how do you stay patient especially when the market is volatile? You know, there are times that the market is volatile. Yeah. How do you manage it? Especially when you're just starting out.
Exactly. When you see market volatile, no matter how volatile an asset is said to be, the only thing I will advise you, just look at the fundamentals of that asset.
Okay.
Once you look at the fundamental of the asset, whether the asset is going down or is coming up, is going up. Once if the fundamental is good, you don't have any problem. Just keep it for some time. Continue keeping it until when your investment objective is achieved. You understand? Because you find out that okay, today certain things may just make maybe an investment that you find to be very, very good, but then the price may begin to fall because of one reason or the other. Because stock market, etc. So when you now find out the prices of that asset is going down, you don't have to panic because over time it will regain. Because financial market do correct prices over time. If the particular asset is said to be overvalued or undervalued, over time the market will correct it. You understand?
Mm-hmm.
So you don't have to bother yourself.
Just need to be patient.
Once you understand the market, it's not a problem. And that is why even though in the market you find out that there are some assets that they even move faster than the market. You understand? That if the market is improving by 10%, you find out that those assets they are improving by 20%. Because depending on the characteristics of the company and the asset itself. You understand? And then some you find out that if the market is improving by 10%, some assets they are just improving by 5%. You understand? So there are some that characteristics. You have a different asset with a different characteristics in the financial market.
Okay.
So you need to know them. You need to know. That is why you need to find an expert in the area. Because that one is only expert that understand better that way. Because it takes time for somebody to gain all this knowledge.
So whoever wants to start investing, they can always reach out to you.
Problem.
Yeah, an expert.
We are there. Yeah, professionals are there. Even not me, but they are all over.
Okay, so what is one investment principle you've lived by or you still live by since you started investing?
Mm-hmm.
What is one investment principle you live by?
The investment principle, one of the investment principles that I want to advise each people to buy is to try to buy when all other people are selling. Buy when other people are selling.
Okay.
Yeah, you buy when people are selling and sell when all other people are buying.
Okay.
Yes, when you find a lot of people are selling, definitely the price, because supply will definitely be more than the demand. And of course, the price will go down. You understand? You buy that and try to accumulate. Then, but when you find out that people are rushing to buy, that may likely, overprice. Over time, there is going to be an issue of overprice. And of course, when you sell, of course, you find out that you sell it in a better price. So, one of the investment principles, study the market. If people are selling, begin to buy and accumulate.
So does it work all the time?
It works. Even if it is bad, over time, when you understand when you have a good insight about the company, you understand, and the asset itself, you don't have a problem. Just buy. If you see people are buying, are selling, you buy. But when you find out that people are buying, then begin to sell. Yeah, so that you sell in a better price. Because if there is a relationship between demand and supply. If the supply outweighs the demand, the price will fall. If the demand outweighs the supply, the price will appreciate. And that's why you now have the issue of overvalued asset, undervalued asset. And over time, the market will definitely correct the price of the asset. The value of the asset will now, the normal asset price or value will not be given over time. Yes.
Wow.
Yeah.
Amazing. Okay. So you said when others are selling,
you buy.
You buy?
Yeah.
And then when others are buying,
you sell. Yeah. When you see people rushing buying, forget about them, sell it. When they buy today, they buy, continue buy, sell it. You just keep your phone. Then when they will sell the same stock over time. They will sell it. You now also begin to buy. You accumulate and you make a lot of gain.
Wow. So what are the unique investment opportunities in Nigeria now, especially for beginners?
Nigeria is a bargain economy. Any investment, anything that you can come across, you understand, there is a lot of poaching inside. You understand? Anything that you can do today in Nigeria, there is that. But if for a beginner, as I was saying, the best place to invest, that's where you are there. You just engage in the purchase of mutual fund, investing in mutual fund. When you invest in the mutual fund, there are some certain technical work that may not be done by you, by the management of the company. Yes.
Okay. So do you have any books that you recommend, maybe for beginners now? Any basic, nothing complicated?
Yeah. What I'll advise is that books for beginners, that you just find any book for beginners. But the problem with investment books, some are technical. Technical in the sense that the more you want to reach, the more you get confused. But there are some simple investment. Any investment book you lay your hand on is a good one when you learn something out of it.
Okay.
I understand the way it goes.
So, sir, as we come to a close, what are your final words on investment? What are the things, any final words on investment that you want our audience to know?
Yeah. What I want to my audience to know, that I still want to emphasize about the first thing, that buy when people are selling.
Okay.
It's very, very good.
Okay.
Let people know that.
Okay.
And then sell when everybody is buying.
Okay.
You understand? That's the first thing that I want people to understand.
Understand.
Then secondly, one has to be patient. Enter into a long-term investment. A long-term investment pay more than the short-term investment. You understand?
Mm-hmm.
That when you buy an investment, hold it for a long period of time. All those people that make money, a lot of money, is because they find themselves into a long-term investment. Don't just invest for next year to sell off, but invest, hold it, so that you now continue to watch it over some period of time. From there, based on that, you now tend to get something.
Wow.
Yes.
Wow. Yeah. Thank you so much. Thank you for honoring our invitation. Thank you so much.
I'm happy to be here with Oluwatosin African Business.
Thank you so much. Thank you so much, sir. Thank you so much.
Yes.
And to our audience out there, thank you so much for following. Today's episode was packed with so much wisdom. And if you ever forget anything, do not forget this one thing that he kept emphasizing. He says, buy when everyone is selling and sell when every other person is buying.
Yeah.
Let us know anything, just whatever it is that stood out for you. Comment, in the comment section below, and I'll see you in our next episode. Thank you so much for watching. Keep following us, like and share. Cheers.